the way I think about it is this: you're not going to get to medium of exchange until you get rid of capital gains, right? Because you can't micro spend your Bitcoin. Like if I paid 5 cents for Bitcoin and now I'm buying a $7 coffee, I'm going to get hit with capital gains on $9.95, and I'm going to be liable for that. And then when I sell to do that, I'm going to be liable again. So as long as there's capital gains tax, we actually have a need for cash flow, right? Because the idea is we want to accumulate as much Bitcoin as we can. So this is where the understanding comes from. And I hope what happens is when we initiate this understanding, when this orange pill moment, red pill moment takes place of, wait a second, they rigged the system. I'm the lender. I'm supposed to be benefiting, not the borrower. What they realize is, number one, that when you have interest rates that are less than inflation, you have less purchasing power. So it doesn't matter the nominal number on the screen. And that I think is the biggest confusing part right here. A lot of the older folks that I talk to, who are very successful and smart people, by the way, these are not your average brainwashed mainstream media propaganda tuned in people. These people are awake, they're smart, they deliver value to the economy, they're producers, they're well off, and they've accrued wealth over their lifetime by the value that they deliver into the economy. Now they're starting to understand, well, wait a second, 5% on treasuries isn't that good when inflation is 11%, because I can buy 6% less stuff at the end of the year. So I need a way to protect this purchasing power value. However, when you talk about cash flow, that's what creates a lot of interest to these people, because a lot of people's wealth, Bitcoiners are the most liquid wealth in the world. So people like Max Kaiser and real OGs who have big stacks, they're actually more wealthy than the Elon Musks and the other people of the world, because they could get the liquid value of their Bitcoin in a very short amount of time. Whereas Elon Musk would have to sell off shares, assets, property. I mean, his portfolio is huge, right? He's one of the richest people in the world. But to liquidate that portfolio would take a lot of time and effort, and there's probably going to be quite a bit of slippage as well. But with Bitcoin, it's the most liquid market in the world. So that's one of the first incentives to how this can work together. The second thing, though, is, and you make such a great point about this, it gets confusing. How can we have Bitcoin? How can we have dollars? Aren't they against each other? How can they work together? And this goes back to education. There's a difference between money versus currency. Money is not currency, and currency is not money. People really need to understand that. And when you look at gold was money. We learned a lot of the characteristics of money through gold. Gold has been a blessing to humanity, in my opinion, to teach us these things. But Bitcoin comes in as the engineered money. It comes in and makes gold better with technological upgrades, doing what gold could never do as a natural commodity. But what happens through that process is that people start to figure out, oh boy, if I sell, I'm getting hit with 20%. If I use my cash flow, this is earned interest, or this is taxed as income. So you can, and with different write-offs and tax incentives, all this stuff comes together. You say, okay, we got a big problem here. Well, interestingly, gold had the same problem. Gold went through this at one point, and gold needed a layer 2 solution. Isn't it funny that Bitcoin actually needs a layer 2 solution and gold needed the same thing? And for gold, it came in the form of paper debt notes or checks and bank deposits that you write against it. Once it achieved that point and it became a medium of exchange because it was easy, the velocity of money, or the pace at which money could change hands, increased substantially. And what that did is that allowed for rapid economic growth and expansion. So when gold was upgraded from a store of value to a medium of exchange, it very quickly became the universal of account. We're only in year 15 for Bitcoin. Bitcoin is like store of value, and we're already in year 15. That in itself is a miracle. And now we're going to have these L2 solutions, which are going to help increase monetary velocity of Bitcoin, where it makes sense to do that micro payment. But we still have the capital gain structure. So we still have that blocker there. So while we're waiting for politicians to have their orange pill moment, and for eventually our generation to move into those positions of decision-making power, and capital gains is removed from Bitcoin, until that time comes, we need to understand how we can use money with currency to benefit ourselves, and even to empower the State of the Union, even though it should be a smaller government, right? We still want to we still want laws. The Constitution, it exists nowhere else in the world. Nowhere else in the world is there a legal document that says that we have God-given rights. That's why these people hate it so much, because it actually declares God to be real and then says he gives you your rights, not government. And these are your rights that are protected. So, of course, the world hates it because they hate the Lord. And don't be surprised when they hate you, because they hated me first. So everything we see here is validated. But then we ask ourselves, okay, I get it. We're fighting the system. We want to break free, but we also want to be lawful. This is a peaceful revolution. What can we do? Well, we can use the currency to our benefit. And gold really exemplified how that can happen. The problem with gold was that it was too expensive to settle and secure, right? If you have to send it across the world, you have to secure it, you have to transport it. Sometimes you would pay more to settle than you would in actual interest costs to borrow against it. So what happened was we moved into treasuries, right? And these government treasuries came in, and the cash flow created from the tax income, which is why the Federal Reserve Bank was so adamant about the income tax, because you needed some sort of continuous, perpetual motion machine, right? You collect taxes perpetually, and it allows you to create a liability off of that continuing cash flow. Well, currency, Bitcoin is now that. Bitcoin is now that. It increases your purchasing power, and you use currency to borrow against your Bitcoin, because the currency is not money. Currency is a medium of exchange. So the dollar, especially in the form of stable coins, in tandem with Bitcoin as the base layer money, as the most pristine form of collateral in the world, it actually enables you during this transitionary period. Because number one, when you borrow dollars against your Bitcoin, there's no tax obligation. So that solves the capital gains problem right there. Now, what you do with that money is different, right? Because if you spend that money, you're spending it with interest, and you have to earn it back without interest. So that it doesn't really make sense. But if you're borrowing against your Bitcoin in order to invest in a business and to invest in anything that will have any type of return on investment or cash flow, well, then it becomes really interesting. Because if you can borrow against your Bitcoin at a rate that's lower than the investment is producing cash flow, you're going to have profit, and profit creates incentive. So we can still get the benefits of Bitcoin at large in society when we combine it with the US dollar. Now, here's a really interesting point I want to dive into for your listeners, because nobody is talking about this. Nobody. A couple months ago, I spoke at the Bitcoin Energy Summit with Byron Donalds, who almost was Trump's VP. And I think actually Trump is saving him for a bigger, better position, perhaps even speaker. So what he said, and he's on the Financial Services Committee, right? So this is the highest level in the United States talking about financial issues in the country. He talks about lack of demand on U.S. treasuries. So we say, hey, CJ, what's going to take down the bankers? What's going to fix this problem quick? You say, oh, yeah, well, it's got to be Bitcoin, right? I always thought it was going to be Bitcoin that would take down the fractional reserve banking model. But more recently, I really believe that stable coins are actually more of a threat to the fractional reserve business model. Now, notice how I said fractional reserve. I didn't say banks. I don't think stablecoins are a threat to banks. I think they're a threat to the fractional reserve business model that banks currently employ. So when you talk about Trump, and he came out and, he said a lot of great stuff. It's a shame that RFK got to speak before him and say all those what would be considered radical things for Trump to say. But if you took away what RFK said and then you listen to what Trump said, you'd be like, oh, this is amazing. It couldn't have gone any better. Not only do we have a Bitcoin strategic stockpile, not only is he not going to sell the Bitcoin, not only is he going to work with people like Loomis, who can put in a bill through Congress so we can stack more, but not only is he going to tap into the oil and make us one of the lowest energy cost producers in the world and a Bitcoin mining powerhouse. I mean, you have all these fireworks going off, and then he comes out and says, I will expand the dominance of the dollar with stablecoins. And I was like, whoa. That is interesting, because out of everything he said, that could have been the shot he fired back at the powers that be who took their shot at him a few weeks previous, because never before has the fractional reserve business model. And let me tap into that real quick. When you put your money to the bank, we told you already, you're lending to them, right? So we understand that they have our money, we're lending. Okay. They're going to take my money and they're going to buy US treasuries. That's going to act as the asset to balance my liability, which is my deposit. They're going to collect 5% from the government and they're going to pay me 0.1%. Okay, I get it. Custodial arbitrage. No problem. But I get to swipe my card and go to the ATM and pay 4% to access my money. No problem. I'll take these trade-offs. Crazy trade-offs that I would never take, and nobody should, but everybody's doing it. Well, here's the big issue. We already saw what happened when they raised the interest rates. People left for the bank deposits to the money market funds in order to get the interest. That created the Fed to take radical action in creating inflation through the Bank Term Funding Program to make up the difference between the mark-to-market value and the par value of the collateral that the banks held, or else the entire banking system would have collapsed.